Today, I'm going to be diving into General Motors, GM. It just might be one of the best plays in the market right now. Sure, there's a lot going on with the company, some good, some not so great, but stick around because I'm going to break down GM's performance. And at the end, we'll be giving it a growth value risk score to see if it's worth your investment. So trust me, you'll want to see where it lands. Let's get into it. So, first off, let's talk about GM's financials. Now, even though GM sold fewer vehicles in 2023, compared to 2021, they've actually been pulling in higher revenues. I know, it sounds kind of backwards, right? But here's the deal. They went from 127 billion in revenue back in 2021 to nearly 172 billion in 2023. That's a big jump considering their unit sales didn't skyrocket. So what's happening? It's they're benefiting from higher prices, especially in the US market. And speaking of the US market, this is where GM is really flexing. The company only sold about 42% of its vehicles in the US, but the US market made up for over 80% of their total revenue. That's massive. They've been killing it in North America, which isn't just about volume, but also about pricing power. From 2021 to 2023, GM added over 10 billion just by charging more for their cars. I mean, people are still buying, just maybe not as many as before. Now let's dig into GM's performance across different regions as well. While GM has been dominating in North America, increasing their market share from 13.9% to 15.6% between 2021 and 2023, it hasn't been all that well for them. China, for example, used to be goldmine for them, but their sales there have been declining. They dropped from 2.8 million vehicles to 2.1 million in 2023, which is a huge dip. But here's the thing, GM's making up for that in other ways. South America is a bright spot, where they've been growing sales, even though their market share has slipped a bit. And despite with all the challenges abroad, their strength in North America is keeping them in the game. Now let's talk about profits, because that's where the magic happens, right? GM's net income took a bit of a hit between 2021 and 2022, dropping from 9.8 billion to 8.9 billion, but they bounced back big time in 2023, hitting 10 billion. What's really impressive is their operating cash flow, which climbed from 15 billion in 2021 to almost 21 billion in 2023. Now for 2024, GM is expecting some solid numbers. They're forecasting 10 to 11 billion in net income and expect their EBITDA to come in around 27 billion, which is no small thing. All right, so let's switch gears for a second and talk about electric vehicles, because we can't ignore that, right? GM's been making some moves in the EV space, but they've also hit the brakes a bit. They were really pushing to scale up their EV production, but now they're slowing down. They were supposed to reopen their battery electric truck plant in 2024, but now it's been pushed to the mid 2026, which is a pretty big delay. But here's the thing, GM is still in the EV game. Their Cadillac Lyriq is doing really well, leading in 22 states, and they're rolling out the Chevrolet Equinox EV, which is aimed at the affordable long-range market. Their market share in EVs actually grew from 5.3% in Q2 of 2023 to 6.6% in 2024. But they've still got ways to go to really take on the big dogs like Tesla, which is fine. So yeah, the slowdown is a bit of a concern, but I think GM is trying to be smart here. They don't want to overproduce EVs when the demand isn't quite there yet. They've adjusted their target from producing a million EVs by 2025 to something more realistic, like 200,000 to 250,000 units for 2024. It's about being flexible and scaling with demand, not just flooding the market. Now let's talk about the risks, because like always, we have to discuss the risks. Every investment has its own specific type of risk, and GM is no different. One thing we need to keep an eye out on is their leverage. Their debt levels have been creeping up on them, with their leverage ratio increasing from 3.06 in 2021 to almost 4 in 2023. They brought it down a bit in 2024 to around 3.5, but it's still something investors should watch. Rising debt can be a red flag if it gets out of control, but so far GM seems to be managing it okay. Although risk is competition, especially in the EV market, GM's going up against Tesla and BMW and even some strong manufacturers in China. They're not just competing on cars, they're competing on technology and the market share. So it's going to be interesting to see how that plays out in the long run. So with all that being said, why am I still so bullish on GM? Well, despite the challenges like the slowdown in EV adoption and the struggles in China, I think GM's financial strength, especially in North America, makes them a solid bet. Their cash flow is strong. They've got solid plan for cutting costs, and even though they're not growing as fast as some EV-focused companies, they're being smart about how they scale up. Plus, let's not forget, GM stock is still undervalued compared to its competitors. They've got a price to earnings ratio of just 5.1, which is cheaper than other automakers like Ford, Honda, and Toyota. So if you're looking for a stock with some potential upside, GM's definitely worth considering. All right, so that was my take on GM. The company's not without its challenges. There's the EV slowdown and they're facing some headwinds in China, but their financials are solid and they're playing a long game here, especially with their strength in the US market. So let me break down my growth value risk score. For growth, I give it a GM. I give GM a solid 7 out of 10 here. They've got revenue growth in North America, and even though the EV side is slowing down a bit, they're still scaling up production, like for their models, the Cadillac Lyriq and the Chevrolet Equinox EV. Plus, they're projecting a strong EBITDA for 2020. As for value, GM stock is looking pretty undervalued compared to its peers. With a low PE ratio and attractive valuation multiples, I'd rate this at 8 out of 10, especially for those looking to get in at a good price. As for the risk, there's definitely some risk to watch, especially with the rising debt levels and the ongoing competition in the EV space. Plus, their struggles in China are a bit concerning. I'd rate the risk to about 6 out of 10. Manageable, but worth keeping an eye out on. So when you combine those scores, GM lands with a composite score of 21 out of 30. Not bad at all. It's a stock with a strong value proposition, decent growth potential, and moderate risk. Definitely worth considering for the long run. That's it, guys. If you liked the video, please hit the like button and don't forget to subscribe if you want to watch more of my videos.